and I've been in the stock market since past 15 years. So I trade the derivative segments as well as I trade the equity segments. I also take positional trades into commodities like crude and gold and natural gas, depending on the setups and depending on the rules when I get those entries. Today we are going to talk about scalping futures, and I'm going to discuss about an important strategy on scalping Nifty and Bank Nifty futures. Let's talk about futures. So in futures you have lot sizes. The lot size of Nifty is 50 and the lot size of Bank Nifty is 25. So if the move is favorable, that means the trade that you have taken is in the right direction. That is, you have taken a long trade and Nifty is bullish or Bank Nifty is bullish. Then Nifty each point move will reward you 50 rupees and Bank Nifty each point move will reward you 25. As against if you have taken the trade in the wrong direction and market is bullish and you have shorted Nifty, then every point move up will take away 50 rupees and every point move up in Bank Nifty will take away 25 rupees. So each script or each equity segment, just the way we have, wherein I can buy 2 shares of Reliance, or I can buy 10 shares of Reliance, or 5 shares of Tata Motors, or 10 shares of Hindalco. But in future segment you can't do that. You have to buy a lot. So a lot size of Reliance is 250. So I can only buy 1 lot or 2 lots or 3 lots. I can buy it in multiples, but it will be lot size. So I will be buying at any point in time 250 shares of Reliance. For this, I need not pay a full price up to the broker. I have to give some margin for that particular stock. Usually, depending on the broker, usually for 1 lot, approximately I'm talking about, the margin under normal conditions is around 1.5 to 2 lakhs. So, when you're trading a lot of Reliance, you need not upfront pay all the entire value of that Reliance. So if Reliance is trading say around 2200 and the lot size is 250, so 2200 into 250, I need not pay that entire amount in rupees to my broker, but my broker gives me a margin, and that margin is what I need to pay up, which would be anywhere around 1.5 to 2 lakh rupees is what I have to give to the broker, which is blocked against that 1 lot. Now, the tricky part here is, if the trade is working in your favor, you are making, each point Reliance move, you are making 250 rupees. But if you are not in the right direction of the trade, your trade is in the wrong direction, then you are losing 250 rupees. There is no breakup here like I buy 10 shares or 5 shares or 15 shares. You have to buy that entire lot. So if you have a good risk appetite, you may buy 5 lots, you may buy 10 lots, you may buy 15 lots, or maybe institutes buy in a larger quantity than what we retailers buy. This is the way how the future segment basically works. So scalping in the future segment is very, very important, because we are looking at a lot size and not just 1 or 2 shares that we are going to buy, and we can alter the position sizing here. Here what you can alter is your risk appetite, keeping in mind the lot size. Now scalping, as we have known, is a trading setup or is a trading type of trading wherein you take small profits. These small profits will be recurrent. You will make less trades which are not in favor of you, so your winners are going to be more than the losers. You will make small profits at any point in time, like there are scalpers who trade 10 points of Nifty. There are scalpers who take 100 points of Bank Nifty, but at the same time they trade in a larger quantity also, maybe 10 points of Nifty on 100 lots makes it like 1000 points of Nifty move. But for that, even the margin required will be around 1.5 to 2 lakhs per lot. So this is done by institutes wherein they trade into huge quantities. But as retailers, we can definitely look at trading larger quantities, keeping in mind that the risk is equally managed and properly kept in mind when you are executing trades in futures. When you are scalping, what you essentially need is a right tool. Unless you have a right tool in your hand, you may land up making more losses compared to profits. And as a scalper, the underlying rule of scalping is your winners have to be more compared to your losers. Also here, you have to have a strict exit strategy or a strict plan or a disciplined trade setup. And in fact, the system that I am going to share with you today, it's a system that I have been working on since past whole year. And this is a system which I derived after lot of hard work, lot of permutations and combinations and all kind of market situations that as a trader we face. Like one of the days there will be lot of volatility. A few days market might just go into a slumber mode and doesn't do anything. It's a complete sideways market. There would be times when we have events like a budget, or we have some kind of a major policy by the RBI. So on such days also I have traded with this particular system. I have tested this system in live markets, and this I have been doing since past whole year. So whatever system that I am going to share with you is a complete hard work that I have been doing since past whole year. And I really take privilege in sharing this system with you, because if I feel that if I can use a system so effectively and so prudently in the intraday setup, so can anybody else use the same rules, same setup, and stick to the rules which are going to be mentioned ahead and make money in market. Another important thing that I realized was, since I am a positional trader, I like to take long swing bets rather than taking small bets into the markets every day. So primarily I am a swing trader. So what used to happen is sometimes the swing used to go on and on for long period of time, like 5 days, 6 days, and during the market hours, this would happen basically when the market is trending. So during the market hours, I would have nothing to do, just look and stare at the screen. So this actually system came up to me as a supplementary system, as a supplementary trading style that I devised, that during the market hours, irrespective of what my positions are in the market, I would have a trade in Nifty and Bank Nifty. My first goal was making small money. My second goal was being consistent. My third most important underlying agenda was being disciplined. Another important aspect that I kept in mind while trading this particular system was I have to be having more winners than I have losers. And when I'm explaining this system to somebody, it should be simple. I feel that many a times we have so many tools today in market, we have so many indicators, and then those indicators are again gone under lot of individual they tweak those trading systems and trading indicators and derive new indicators out of it. But I feel that sticking to something very simple helps me to use that system very prudently. It helps me to stick to the rules, and sticking to the rules and knowing where my exits are is one of the most important underlying aspect of a scalper, that I should always know where the exit door for my strategy is. If I'm wrong, which is very much possible, because we don't have a holy grail in market that out of 10 trades that I take, all the 10 trades are going to be successful. There would be a time in markets where the trade is going to go against you irrespective of whatever market condition you are facing. So in such situations, I should know where my exit is. I should know effectively that I should be taking a quick decision as to, no, this trade is not working, this trade is not fitting into my rule setups, and I need to exit this trade with whatever small losses which are going to happen. The fifth important aspect of this trading system, when I was working on it for the past whole year, was I wanted to have a good risk reward. What is a good risk reward? I would want that if the particular system is giving me 30 points of risk, it should give me 30 points of reward as well. So working on a system which is giving me minimum stop loss. So if I'm wrong, I want to be wrong for a small amount rather than being wrong for a big amount wherein the stop loss would be hit, and then I would feel very bad. Emotionally it would be a setback, and also at the same time it's going to carve away the capital which I have deployed in the market. Eventually, if you don't have capital, what are all these systems and all these rules? They are of no good, right? So we need to be very prudent with our money management when it comes to scalping. So scalping basically is wherein you are quick into the trade and quick out of the trade, making quick profits with disciplined rule setups, and also at the same time the volumes may be a little high and the frequency of trading would be a little high. At the same time, you may have to devote lot of time with the screen. Of course, now with algos, these systems can be automated and you can get those trading signals from the the buzzers or whatever alerts that you have today on the charts. So you need not be grooved to the screen all the time. But yes, you have to be near the screen to execute your trade, and you have to be knowing if your trade setup is working in your favor, and quick exits are what this scalping method is all about. And hence having lot of time, screen time is very important, that you should be able to devote that kind of time with the screen. Second requirement, here you will find the checkout to be below the prices at that point in time. We are looking at a long setup, so we want checkout first to be below the price, then it wades the price wall and wades through the prices and goes in the upward direction and gains further momentum in the trade. And the third aspect of camarilla levels, wherein usually you will find that when a long setup is coming in, the prices would be opening or very close to the S3 and the S4 levels. Let's now look at individual charts and let's learn more about the rules for this particular setup. So let's look at the chart settings that we need for trading this particular system. The chart settings that we need requires the Japanese candlesticks, so open, high, low, close candles. It's on 5 minutes chart and for Nifty and Bank Nifty only. The same setup can be used for stocks, but the time frame would vary to about 15 minutes. But specifically in this particular presentation, we will concentrate only on Nifty and Bank Nifty. So the 5-minute charts that we are looking at. The tools that we are going to deploy to pick the longs and the shorts in this particular setup. The first one would be Camarilla levels. Second one would be RSI. The third one will be Chicago. We will use 200 EMA and the intraday VWAP and the pivot levels to understand the targets for that particular time frame. Now let's talk about what the long setup will look like. For a long setup, I want RSI first, RSI to be below 30. RSI below 30 is my signal that we can expect a long setup coming up in the trade. Second, I want the next candle wherein the RSI was below 30, the following candle to close above RSI 30. That gives me an indication that there is a long probability, and that is my entry signal candle that now RSI has started rising. The third candle after that, opening at the third candle, will be my entry. I will explain to you the entire setup in the charts, and we will see how the chart looks like and where the entry and where the exits would be. But just to understand, RSI below 30, the candles close above with RSI above 30. That is your signal candle, and the third candle will be your entry candle at opening. The stop loss here would be the swing low with little bit of filter of about 15 points. For Nifty, the stop loss is below the swing low with a 15-point filter. So if your Nifty swing low is say 17,415, your stop loss will be 17,400. Just an example. For Bank Nifty, the stop loss will be 75 points. So if Bank Nifty is trading at 39,500, your stop loss, the swing low of Bank Nifty is at 39,500. Then 75 points below the swing low would be your stop loss. The targets would be 200 EMA or the pivot or the intraday VWAP, whichever is lined up in the hierarchy on the upside. So this is about the entry and the setup that we need, and you will usually find at this particular set the Chica will be below the price, and once the momentum catches up in the trade and in towards the direction of long trade setup, then the Chica will start crossing the price wall and wading its price up and bringing in more momentum to the trade setup. This particular setup you will find usually at a support level of Camarilla, maybe around the levels of S3 or S4 is where you will usually notice this setup working in a better way. Let's look at or discuss what is the shorting setup. So for shorting, we need RSI to be above 70. Second indication will be RSI breaking down from 70 in the next candle, and that is your signal candle that RSI is below 70. Your entry would be, your short entry would be at the open of the third candle, because unless the second candle closes below 70, we do not have a signal that the RSI has started correcting and is started its journey towards the level of RSI 30. At this point in time, you will usually find that the Chicago is above the price, and this setup will be usually near the resistance area, near the R3 or the R4 of Camarilla levels. Another important observation here is once the Chicago starts finding its way down, crossing below the price wall, it will catch up more momentum, and the stop loss again for this system will be for Nifty 15 points above the swing high, and for Bank Nifty 75 points above the swing high. Usually with Chicago crossing the price wall on the upward side for long trades and on the downward side for the short trade, you will see momentum coming in this trade setup and the trade setup working in our favor. Let's look at some charts or some examples which I have shortlisted from the recent trade setups and understand how this trade setup works for Nifty and Bank Nifty for longs as well as shorts. So let's discuss this with some examples on the chart. In this particular chart setup, you will see that we have a short entry coming up. You can see RSI is above 70. So this pink mark which you can see is at 70 RSI and RSI is breaking down from 70. So this particular first candle told me that RSI is about 70. So you can expect a trade on the downward side. Next candle RSI breaks down from 70 and starts breaking down and going below the RSI 70 mark. Now if you observe, this is near the resistance R4. If you can see this red line where we have indicating that there is a resistance. When I discussed the chart setup, I mentioned to you that near the resistance R3 or R4 you will find that these particular trade setups are usually forming. Here you will see that the Chicago level, Chicago is above the prices. There is a price wall here just below the Chicago. So once the Chicago starts breaking this price wall, there will be further momentum breakdown in the RSI and RSI will travel all the way to 30. This is something like a range shift that we are talking about, wherein in range shift it breaks down and retests the 70 level. But here we are just wanting, since we are looking at a scalping horizon in this particular trade setup, we want it to be above 70 and just breaking down below 70 in this particular candle gives me the signal. So this particular candle is your signal candle. Now let's look at how this trade worked. Here the first target would be your blue horizontal line, which is your pivot. The second target is this white line, which is 200 EMA. And the third target would be, by the time it comes to the 200 EMA, it may have achieved the RSI 30 mark. So let's look at how this short entry of Bank Nifty 5 minutes time frame worked out to be. The next slide here, you can see this is the same chart setup. Here we did not get that close below 70. Prices again made push up, and this is the level where we actually got a breakdown in this particular candle at the RSI 70 mark, and plus a breakdown in the Chicago, which is coming here. The green line is the Chicago scaling below the prices and started wading its way all the way lower. So when we were discussing the previous slide where we talked about this pivot as your first target, something that you shorted here. So this was your signal candle and this was your entry candle out here. Followingly, we have the first target of pivot getting achieved. So something that we shorted here at the signal candle, and the short was around 43,000 level, met its first target of pivot, and eventually the 200 EMA target was also achieved, and even the RSI hit the mark of 30. So this is how the short trade setup works up. Let's look at another shorting example. This is also an example of Nifty 5-minute chart. The RSI here was at 70, a huge bearish candle giving an indication that the RSI is breaking down. This was the entry candle. At the opening we are supposed to short. The high of this particular candle with a 15-point filter on the top would be your stop loss, and the targets would be the pivot, 200 EMA and the RSI 30. Let's see how the whole trade panned out after that. The Chicago is above the prices. Prices should break the Chicago will break the price wall, and the RSI 30 target will be achieved. So here is that same trade setup, exit setup, wherein the huge candle entry was here, first target pivot, second target was your EMA 200, and the third target of RSI 330 was achieved. Now let's look at some long setup example. During the long setup, as we discussed, RSI will be below 30 and the next candle RSI will be a signal candle wherein RSI rises above 30 and gives you a signal. The third candle will be your entry candle, and usually you will find this setup near the support of S1 or S2 levels, and the Chicago would be below the prices. Chicago wading through the price will bring in more momentum, and the pivot is your first target. Then your if the EMA is above the prices, that EMA or the resistance R1, R2 would be your second target, and RSI 70 will be your third target. Let's check out how this trade panned out by the end of the day. This is the same trade setup where we got the signal candle here. The entry was here. The stop loss would be 15 points below the swing low. So this was the swing low for the day. So being Bank Nifty, the stop loss will be 75 points below the swing low, and the Chicago wading through the price and the prices achieving the pivot as well as the H4 level, and the RSI 70 mark was also achieved over the entire trading day. So a good scalping system wherein you have a very low risk to reward. Usually 1:1 risk to reward is achieved in 1:2 risk to reward and 1:3 risk to reward are highly possible with this particular trade setup. This is an example of Nifty wherein RSI was below 30. This particular candle, a bullish candle, brought the RSI up. Chicago was below the price and the prices were near the S1, S2 levels. Now the first target would be the pivot, the second being the H4 and the third being the RSI 70 mark. Let's see how of course the stop loss will be below the swing low of that particular day, 15 points below the swing low, because this is a Nifty trade. Let's see how this trade panned out over the day. So this is that particular signal candle that we talked about. This was the entry candle, and the trend continued through the day without breaking the day low. Below the day low, 15 points below the day low was our stop loss, and the trade worked in our favor, achieving the first target, and RSI 70 was also achieved. So on a trending day, there is one small tip that I would give you, that on a trending day, usually in this particular trading setup, like if the market is really bullish through the day, and you will find that towards the end of the second half of the day, RSI has reached already the mark of 70. So on a trending day, which is a bullish day, are we supposed to short market at RSI 70? Then I would say that wait for a divergence to form at this level. So what is RSI divergence? It is about the RSI making a lower high, but the price is making a higher high. That is telling me that RSI is no more bullish, and there are certain candles in that 14 period which have marked gains, which have marked the gains so that the average gains is a little lower. This is the time where I would wait on a trending day for a divergence to form and then take the short entry. Similarly, on a bearish day, when the prices are already below the support levels S3, S4 levels, and RSI is hovering below 30 all the time, and you know that the trend for the day is bearish. On such days, instead of just plunging into the trade because RSI has broken above 30 and taking that trade, I would say that wait for a divergence to form. So divergence is a key that you can look out for on such trading days. Usually Nifty gives you a reward of 1:2 and Bank Nifty gives you a risk reward of 1:3. So if there is 100 points risk in Bank Nifty, 300 points is your reward. If there is 50 points risk in Nifty, there is 100 points reward in the Nifty trade. So 1:2 and 1:3 is the usual risk to reward in this particular trading setup. To summarize the whole thing, I would say that no particular indicator or no particular trading system is going to work 100% of the time in the markets. We have to be prudent to pick the trades at the right time and at the right moment. For scalping, this is a very important ability that a scalper needs to develop. The rules that we have discussed all through along for the long and the short trade setup helps you to stick to that, please stick to those rules so that you know that you are trading in the right direction and you are trading, you are into a good risk to reward setup. For a scalper, the risk to reward, the exits and the quickness of executing the trades is one of the most important ability that he needs to develop, he or she needs to develop as a trader, and utilize that particular trading time frame to its fullest to make money. So this particular charting system, it's no holy grail again. It is one of the ways that I have devised over the past whole year, looking at the index, being in front of the screen, spending my days together with various indicators that I can, place. I have tried this system using with ADX, I have tried with MACD, I have tried with RSI, and after the whole study of 1 year, I have been able to narrow it down that this particular, trading setup works in this manner, and the long trade setup has got these conditions laid down. The short trade setups will have the following conditions laid down, and the trades executed when the particular setup comes up has got the best risk to reward. Also, the win situation is almost 70 to 75%. That you get the winners in this trade, and as scalpers, as we have discussed, we need to have more winners than losers. Of course, again I stick to the same comment that plan your trade a day before. When the markets are closed for today, I know where the RSI for the 5-minute chart is for Nifty and Bank Nifty, and what can be expected. Is it below 70? Is it below 30? Is it above 70? Is it above 30? So all this analysis can be done beforehand when the markets are shut. Next day in the morning, when markets are opening at 9:15, we know what is to be expected. Are we expecting a gap up? So in that case, we may have markets going to the resistance level, and in that case RSI may be at 70 and we may get a shorting opportunity. If markets are opening gap down, we have a long opportunity coming up at the Camarilla levels. So using the three tools, that is Camarilla, Chicago and RSI, in amalgamation with each other has helped me devise this system. I'm sure it will help you to make good scalping trades through the day. Please try it and give me your reviews. Thank you so much. Hello friends, let's look at how to add the RSI scalping strategy using the Camarilla pivots and the Chicago span on a 5-minute RSI strategy that I have discussed for Nifty and Bank Nifty scalping. Let's head to the screen and see how to add these indicators on the trading view. So in trading view, I open a 5-minute chart. I'll choose in the indicators Ichimoku cloud. So this is the indicator that I choose. After choosing this indicator, I will go to the settings of the indicator. In inputs, the default settings would continue, but in the style, I will remove all the other, uncheck all the other lines. I just need the lagging span out here, wherein I will change the color and make it bolder and black color out here. So the black line, which is the Chicago span, gets visible on the chart. The second indicator which we use out here is Camarilla pivots. So Camarilla pivots, when I type in the indicators, I have to use the Camarilla pivot V2. This is the indicator which I use, and once I add the indicator to the screen, I will go to the settings again. I will uncheck the H1, H2 and L1, L2 levels from here. I just need the H3 and the H4 and L3 and the L4 levels to indicate the support and resistance for that particular day. The third indicator which we have to add is RSI. I'll go to indicators, type relative strength or RSI. Even if I type RSI, this is the indicator which I will use, relative strength index, which you can see. Again, go to the settings once it is added on your chart. Just check the RSI line. Only the RSI line is what we need, and we need the RSI upper band at 70, lower band at 30. You can change the color, maybe make it black so that it is more visible and more prominent on the chart. And here you have the system ready. So need the H3 and the H4 and L3 and the L4 levels to indicate the support and resistance for L1, L2 levels from here. I just need the H3 and the H4 and L3 and the L4 levels to indicate the support and resistance for that particular day. The third indicator which we have to add is RSI. I'll go to indicators, type relative strength or RSI. Even if I type RSI, this is the indicator which I will use, relative strength index, which you can see. Again, go to the settings once it is added on your chart. Just check the RSI line. Only the RSI line is what we need, and we need the RSI upper band at 70, lower band at 30. You can change the color, maybe make it black so that it is more visible and more prominent on the chart. And here you have the system ready. So if you see, we can also add, if you want maybe a shaded area of the upper band, if you're comfortable with it, to give you overbought or a oversold gradient is what you can add to it, which will tell you that when the prices are above the 70 mark or below the 30 mark, it will give you a hint as where the prices are, whether they are oversold or overbought, and give you the entire setting of the RSI intraday strategy for indices. Thank you so much.